Hi, everyone. We're just going to wait a minute or two just for the last few people to join us, and then we'll get started. Okay, good morning to all of you in the UK, and good afternoon to everyone else who's sort of an hour east of that. And welcome to our June edition of the bizval webinar. Today, we're going to be talking about preparing a business for sale. And preparing a business for sale is not like selling a car or a house. You don't just wake up one day and then decide to sell your business tomorrow. It takes careful planning, preparation, in order to achieve the best possible outcome for both the buyer and the seller. It's a two-sided equation, this. I'm Graham Stephen, the co-founder and CEO of bizval, and today I'm joined by my co-founder, the eminent finance ghost, as well as two very special and expert guests, Cliff Spolander from Business by Design and Rupert Trevelyan from Weybrook Business Brokers, who are both based in London. They're going to have an opportunity to introduce themselves shortly, but we're going to be running a little bit of a competition today. So both Rupert and Cliff have two interesting things in common, besides being in London and involved in the SME business space. So, listen carefully during the webinar. And if you think you know the answer, you need to pop it in the comments. The comments are set to private, so only the moderators can see them. And the first person who guesses it correctly, in other words, both of the commonalities, will win a free live business valuation, as well as a 30-minute consultation with the bizval team. So before we get started, just some quick housekeeping. Firstly, thanks to all the attendees today. We have, over 120 registrations from the UK to Morocco to Botswana to South Africa to the United Arab Emirates. So it's a truly global audience. The chat section, as I mentioned, is set to private, so only the presenters and moderators can see your messages. But if you have questions and comments, we'll respond to those and we'll repeat them to the audience. We will be recording the webinar, and it will be made available on YouTube in case something comes up and you need to drop off the call. Also, a few pieces of admin, just check out the handout section. So the slides, some of the slides are available in the handout section of Demio, so you can click on there and download those, which you can review after the webinar. And we also have a poll running. So please click on the poll section of the report and answer the poll. We're also going to just talk about the results of our previous poll. So the previous webinar was on a global lens of valuations, and we asked, how do you use accounting information in your business? And we see that most businesses do have some form of management and financial accounts which are up to date and are used. So we're dealing with an audience who kind of knows their stuff and understands their stuff, which is great. The poll for today is around, how busy or how prepared. So I'm busy juggling my screen here and I'm losing track of where I am. But how prepared are you for sale? So if you can answer those questions, and we'll report on those shortly. So some of you might know, I've recently returned from a trip to the UK where we met with various partners on the ground and as part of bizval's expansion to the UK. So as much as we embrace and utilize technology to make valuations quick, fast, and affordable, we place a huge focus on customer engagement, with business owners and also partners. So that means working with people who understand and support the private and SME business space. So Cliff and Rupert are two such individuals. They've got extensive experience in guiding owners to maximize the value of their businesses. So I'm going to hand over to the Ghost, who's going to facilitate the discussion with Cliff and Rupert. Over to you, Ghost.
Better than it was this morning. I was sounding extremely ghostly at 8 a.m. I had to cancel the podcast this morning, but seem to have gotten some of it back. Luckily, I'm not doing most of the talking today. That will be Rupert and Cliff, and then obviously the Q&A section. So please get those questions through. But I'm going to allow Rupert to go first. I think he just sort of claimed as our most experienced person on this call, he gets to go first. So Rupert, I'm going to hand over to you. You've got some cool slides to take us through, and then Cliff, the same from you, and then we can jump into the Q&A. So get those questions coming through in the meantime. Don't be shy. You don't have to wait until they are done speaking.
Thank you. And thank you for pointing out I'm the oldest member of the panel. The nearest to becoming another ghost, I think. I am Rupert Trevelyan. I run a business brokerage in the south of England. It's something I've been doing for the last 5 years. And it's something I got into, actually, when I started trying to buy a business. I was trying to buy a business, and I was being put in front of a lot of business owners who didn't know why I was there, really, other than that they'd been given a message by a broker to meet me, and I didn't know what I was doing. And I very quickly realized that there is a lot to this selling business and getting your business ready for sale. And I felt very strongly that I can help with the buying process. And we'll move on to the next slide, if we can. And there you can see me again. So what we do, we work with entrepreneurs and business owners, and we really sort of understand their business and help them do a few key things. We help them sell businesses. That's what we do. The key thing we do is help sell business, and it's all about making sure that your business is in a fit state. And we'll go in and between me and Cliff, we'll hopefully elaborate quite well on how you have to prepare your business for sale, because it's absolutely critical. I also work with a number of people to buy businesses, and I see it from the other side. So it actually helps with that process. But the key thing for everybody, and what this is about today, is you've got to prepare your business for sale. If you don't prepare your business for sale, the valuation that you get from your business will not actually sort of deliver what you need. So it's all about being very sort of focused on what you do. If we go to the next slide, this is a time-old what, why, where, when, how, who, but it's absolutely key to what you should be thinking about when you start planning your business for sale. The thing is, most businesses don't actually sell. And as a broker, sort of standing in front of you saying that most businesses don't sell is quite a statement. But certainly here in the UK, most businesses don't sell, and that's because people haven't got their businesses ready to sell. And if those that do sell, quite a few don't achieve the best price either. It really is absolutely critical that you actually put some time and effort into getting your business ready, and that you have a business that is growing and has the continuity, so you can achieve that clean exit. And you also have to make sure that you don't actually put any sort of hand grenades in the way of actually selling your business. The last thing you want to do is at the last minute is find something that's wrong with your business and actually stop the sale. So it's absolutely critical that you need to sit down and think, why do I want to sell my business? And when do I want to sell it? As the ghost very kindly pointed out, I'm a bit more senior here in terms of years. So for me, it's more important that I start thinking about my retirement and when I'm actually going to exit the business world. So I shouldn't be thinking about that. If I want to exit next year, there's no way I should be planning that now. I should be looking at least 5 years in advance and actually putting in place a plan for my business to make sure that it's ready to sell in 5 years' time. And I really do mean that. You may well be in a fit state, but you may not be. So it's absolutely critical. Back in 2008, when I was in the corporate world, I was trying to buy a brewery. I spent 2 years in the brewery sector. And the owners of the brewery very clearly wanted to exit the world of commerce and actually do something else. One wanted to sail around the world on a yacht. And the other one wanted to move to California and join the world of IT. Very clear goals. And I think that's important. You need to think about the long-term vision. So if we could go to the next slide. I want to talk about two businesses to illustrate this slide that I had on my books at the beginning of this year. Both of them turn over £1.6 million per annum. So in terms of value, you would think, okay, they both turn over £1.6 million. They're probably worth the same. And that's the first assumption you would make. The first business makes a profit before tax of about 700,000. It's got a nice pile of cash in the business. It's got a very good management team in the business, and it's very well run. So all the documentation's in place. The second business, they've both been in operation for 30 years, by the way. The second business is a good business, but the owner's lost his way a bit. He's dropped his focus on the business, and the continuity of the business is great. He has sacked his general manager, hasn't replaced the general manager. He's not making a profit, and he wants to sell the business. Well, the first business is actually sold for £3 million. We completed on the sale just at the beginning of June. We sold it to an American multinational, and everybody in the whole process was incredibly, happy about it. That's because we had profit in place, we had the team in place, we had all the documentation in place, and we'd done the planning. The second business is actually not worth anything. They're not making any money, and worse still, a buyer will have to replace the general manager, add that cost back to the valuation cost when they look at actually replacing the existing team. So it is absolutely essential that you look at planning for your business sale. You've got to have good cash flow. You've got to have recurring sales, and you've got to be growing. You've got to have a team in place. You've got to have all the paperwork in place in terms of your accounts and your legal side. And you've got to make sure your shareholders are in agreement. And this is a point that I'm sure Cliff will make, and Graham will make as well, and the Ghost will make. Good advisors are absolutely critical. You need to have a good commercial lawyer. You need to have a good accountant. You need to have good advisors, a good broker. I'm not selling myself here. I'm selling the fact that you need to keep your business absolutely on the straight and narrow so that it's fit to sell. And then when you do have a potential buyer in place, you've got to make sure you've got a good personal network in place to, have shoulders to cry on when you're actually going through the process, because it's tough. It is really tough going through a business sale. Owners will put you through a very tough due diligence process, buyers will. They'll put you through a very tough due diligence process. It's not to be nasty. It's actually to make sure that they're buying a good business. They will ask every question they possibly can, and they'll ask difficult questions that may seem very personal. And therefore, if you've got a good personal network that you've got shoulders to cry on after work, it's very good. And if you've got a good sense of humor, that helps as well. So, that's very, in a nutshell, where I'm coming from. And when you look at what Cliff has to say, he'll give you a bit more detail in a minute on how all this sort of process works. And, it really is important that you get your preparation in place. Next slide. I think we're... that's me. If you want to contact
Rupert?
me, that's great. But if you don't, you can always contact me through Graham. So thank you, Graham.
So what are you planning on doing, Rupert, when you go off to your retirement?
Well, I can't give you entirely of that because it will give away some of your the answers to your questions, Graham. But I'll certainly be buzzing around a bit, and tasting some nice sweet tasting products. Yes,
almost giving it away,
maybe
Rupert.
doing a bit more of that.
Those are pretty good clues there. Honestly, they are. I'm gonna allow my parents always used to joke about age before beauty. I don't know if Cliff will mind me using that in this particular case. We're gonna let him come in here. I would again just those attending, just answer the poll for us. It's quite interesting to see it thus far. So far, flowers in reception are pretty much tied for the win here in terms of preparation for sale. So go and check out the poll if you have no idea what I'm talking about. And Cliff, will hand over to you now.
Thanks, guys, and I'm absolutely buzzing to be here, so thanks for having me. Just a quick, brief history lesson about me. I started my career off as an officer in the South African Navy before moving to the UK back in November 2000. And since then, I have started, bought, sold a number of companies in a variety of sectors. So in terms of acquisitions that I've done, I've bought 4 and I've sold 4 companies. So I've been on both the buying side and the selling side. So I felt the pain on both ends. I think there's a next slide potentially.
Yeah.
Next one.
There we go.
There you go. So that's brief. Yes, that's fine.
Next one.
That's fine. Yeah, that's fine. So
That one. There you go.
brief history lesson there. But essentially, when I sold my last demolition company back in 2019, I wanted to go on more of an acquisition spree and look to acquire more companies. And it was during this period where I was having conversations with owners, and it was very similar in style, in that they had ridiculous expectations on valuation, no idea on deal structure. They are the business. Essentially, from my perspective, I was going to be buying a job, not a business, and that's not what I kind of wanted to do. So what I did was, and when the pandemic started, gave me the time and space to go back and really understand what it is that I was doing and had done in being able to sell my 4 companies when I wanted to and needed to. And so without realizing, I had created a methodology that allowed me to do that. But it all kind of stems from some of the statistics that I was finding. If I want to show the next slide. Now, these are stats from the UK, and it shows the survival rates of companies that are employing at least one person. And you can see by year 5 that around 42% are still trading. And then by year 10, only a third of companies are still around. So those stats are pretty dismal. Now, if you were to consider and look at, go back again, sorry, next one. There you go back and look at that, and look at those companies that are one-man bands, they're on their own. The failure rates are a lot worse. So next slide. And so what I did was from 2010, I started really looking at data, just because I'm kind of a data freak, and to see exactly what's really kind of going on. And now looking at the UK economy, there's about 1.4 million companies in the UK employing at least one person. It's a further 4.2 million that are essentially sole traders, one-man bands. The percentages are very similar in other countries. Obviously, the numbers will be different, but percentages are fairly similar. But if you were to consider those companies employing between 1 and 50 people, which we could simply say is the SME market of the business world. Now, for the UK, those companies account for over 97% of the business landscape in the UK. Essentially, the backbone of any economy. If you go to the next slide, so this is what's come out from the research that I carried out since 2010. And just by looking at those companies, there's 1.3 million companies employing 1 to 50 people. I found that over 90% are not sellable in their current condition. And very similar to what Rupert's saying, of those for sale, more than 80% will not sell. And again, those that do actually sell, less than 5% will sell for what the owner was kind of expecting to sell the business for. So not only are the survival rates as a business owner pretty dismal, when it comes to exiting in terms of selling your business, the rates are even worse. So the stats, the odds are against us as business owners, and we need to try and reverse that as much as possible. You get the next slide. Now, this was a survey carried out in the States just before the pandemic, and they asked owners if they thought that exit planning was important. And so very surprisingly, 95% of owners interviewed agreed that exit planning was important. However, despite those 95% of owners agreeing that it was important, 71% had no formal written plan of how they're going to exit the business. 62% kind of given it some thought, and 43% actually had no plan whatsoever. And I found that to be very interesting, and I wanted to figure out what was really driving those statistics. Why weren't business owners looking at this in more detail, even though they knew it was important, but yet they weren't doing anything about it? And through my research,
So, Cliff, if I
Yes.
may interject a little anecdote, at the moment, 43% have no plan at all. But just to talk about stats and damn lies. Well, on our poll at the moment, 41% only have flowers in reception. So, that's a pretty accurate snapshot.
There we go. Excellent. Next slide, please, Graham. Now, looking at reasons why owners aren't preparing for exit correctly, I found there to be three main causes. Now, I won't go to each cause in detail due to the time that we have, but essentially there are three main reasons that are driving those stats. And the first one is a lack of perception around what exit planning is, and it's typically around, what's the value of my business. Owners tend to always overvalue their companies. You need to look at the risk profile of the business, understanding where the risks are within the company, externally and internally, to work out, to gauge what they need to do to de-risk the company as much as possible. Then we look at deal structure, we look at transferable value, we look at how to take your business to market using a broker potentially. And so all these things around time, around how long does it take to get your business exit ready, all these things create a lack of perception. Because, as Rupert said, and Graham, you've alluded to this, many owners think that selling a business is like selling a car, selling a house. You simply, tidy it up, give it a bit of a clean, and stick it on the market. It's a lot more involved, a lot more complicated than that. The second reason is a lack of preparation in what I call the 7 Ds. Now, we all know life's unpredictable. And so this is where the 7 Ds come in quite nicely. Now, the first one is deal. This is where you as an owner could get approached by a potential person looking to acquire your business. Now, I had a client yesterday. She lives in Spain, got a company in Belgium, and then a very large Irish company was looking to acquire her. Now, I've just started working with her, so we're only beginning on working on her exit plan. But she's now been approached, but she's not quite ready yet. So that's going to impact how she's going to be exiting. Does she still take the offer, which will probably be a lower offer? So that's a discussion that we need to kind of work out over the next week or two. But essentially, she was not ready for when that offer came. The next is the owner decides. They say, I want to or need to exit my company right now. And if they're not prepared, if the business isn't prepared, they may not be able to do that. And then you've got distress. This is where owners are stressed out, they're burnt out, they want out. They'll take any offer going just to get out of the problem, to get away from the pain. The next one is disagreement, typically between shareholders or co-directors, where the parties split off and people don't actually make use and get to foresee the real value and the wealth that the business can generate. The next one is disease and disability. It's something that's becoming more and more prevalent as the population ages. And say life's unpredictable. We don't know what's around the corner. And so we have to ask, well, I ask myself and ask my clients, if they aren't able to work in the business for whatever reason, due to health, due to an accident or whatever the case is, can the business still function? Yes or no? And if they can't, what do we need to do to get the company to the point where it can still function without them? The next one is divorce, something very difficult to plan for, but it does have a material impact on your ability to generate and create wealth, at least for the short term. So again, something to consider. And finally, death. I think none of us is going to avoid that. And death isn't an exit strategy. Death is simply an event that happens. And if the business is not prepared for it, it will leave the family to deal with the mess. And if you've got employees, they may not have a job anymore. So again, the company needs to be prepared for that. And the last one is process. This is where the owner doesn't really know what to do to get themselves exit ready. They don't know how to work out where they are exactly, where in terms of their business plan, in terms of themselves personally, and more importantly, their financials. What do they need to be financially secure once they exit the business? So they need to figure that out first. We need to find out exactly where the owner is. Then we need to understand exactly where they want to go. What is their ideal exit? Who's the ideal buyer? Do they plan on selling? Do they plan on liquidating? Do they plan on closing the company down? What does that exit look like for them? And then once we've got those 2 points, we can then work out a strategic plan to get them from where they are now to where they need to be. So essentially, those are the 3 key kind of causes that are preventing owners from exiting their companies successfully. And that's down to a lack of perception, lack of preparation, and a lack of process. So that's me in a nutshell. Happy to continue when you guys are ready to.
Fantastic. Thanks, Cliff. And, I think we've touched on quite a lot there. And I think, we always look forward to this part of the webinar when we actually take questions from the audience and really get to pick your brains and put you on the spot with some of the sort of unprepared and unprompted questions. So the first question coming through is, and I'll ask both of you this, if you had to pick one thing, that is the biggest impediment to sales, or if you had to say to a business owner, what is the one thing that you need to focus on first before embarking on getting your business ready for sale journey? What would that be? And Rupert, maybe we can start with you.
It's difficult to actually drill it down to one, but for the answer, I'm going to drill this one down to one. Is what you have to make yourself redundant. Basically, what you need to make sure is that the business can transfer without you. So you need to make sure that you have a team in place that will transfer with the business and take the knowledge and the running of the business away from you when you actually exit. So the idea is to, in the best way, make yourself redundant and not an impediment to the sale. Over to you, Cliff.
I think for me, I think we all heard of Stephen Covey and the 7 habits of highly effective people. And what Stephen Covey covers is begin with the end in mind. And so with my clients, we look at what is it that they are wanting to achieve. And it typically is to be financially secure at some point in the future. When they sell, exit, retire, whatever the case is, what do they need to have financially to be financially secure? And so what we do is we work out what that number is. Is it 2 million, 3 million, 10 million? What is it that they need to be financially secure? We also then look at needs versus wants. Now, I may want 10 million pounds, but I only need 2 million. So we need to define exactly what they need versus what they want. Now, once we have that number, we can then work back and track back what they need to do in the financial plan, their personal plan, and in their business to get them to that financial security. So that's one of the biggest things I come across is that owners don't know what that number is, and therefore they can't track back to work out what they need to do in the business. And so they think they need 10 million, but actually they don't. And so they place a value of 10 million on their business, but actually they don't need to do that. So for me, I'll begin with the end in mind.
I'm going to jump in with one. So tricky one, perhaps, and something I've seen in my own career is, how often do you come across clients who actually, in the nicest way, shouldn't do this? And what I mean by that is perhaps the business is actually just too small or not quite economically strong enough to justify the cost of succession. Because I think that's the one reality for entrepreneurs and why they don't do it, right? Is if succession was cheap and easy and guaranteed to be successful, everyone would have a 2IC and they'd all be playing golf or, doing other hobbies or whatever the case may be. And unfortunately, we know that's not true. Like, how often do you see a situation where the cost of succession actually ends up doing more harm than good? I've seen that myself, and I'm interested to see what you've seen of this in practice.
I would say at least 50% of the approaches I get are people in that situation, at least 50%. And I always take the time to sort of talk through, not in such a structured way as Cliff's model, but actually take people through the process and actually get to where they want to do. And in many cases, if you are a sole business owner or you're a small business owner, there is another thing that you may look at, and in terms of Cliff's model, maybe, I don't know if you do this, is it actually, make sure you extract enough cash to live when you are post running your business. And that's the key thing as well. You absolutely have to know what the end goal is. So yes, a lot of businesses many sole traders are not transferable because basically they are sole traders and they are the business.
I think goes to probably answer your question. I'll ask you a question in a way as well, but I'll answer at the same time. I suppose we need to understand, what do you mean by exit planning and exiting your business? And what I found is that people tend to think, and naturally, when you say exit planning or exiting your business, they equate exiting with selling, which is fair enough. But when you sell, who are you going to sell to? Is it someone external to the business? Or is it going to go, if you're going to go bigger, you're going to IPO it? Are you going to look for private equity? Are you looking for strategic buyers, private investors, owner managers? What kind of flavor of external buyer are you looking at? If you're going internal, management buyout, EOTs, things like that. Again, how much control do you want? What's the tax benefits in the country that you can use and make use of? Do you have a management team that can run the business? Are they capable of running the business? You could sell to a family member. Again, that opens a whole host of new questions. Do the kids actually want the business? Are they capable of running the business? Will that mess up the management structure for people who've been in the business for a while? All these different things. But then also we can look at other ways of exiting. It's not just selling. You can liquidate the business through planned liquidation. Now, I appreciate that liquidation does conjure up some negativity, and unplanned liquidation is a bad thing. It's not a sign of success. It's definitely a sign of failure. However, planned liquidation, if done correctly, is a perfectly legitimate way of exiting a business. But it must be done correctly and be planned for. And so as long as all the creditors are paid and employees looked after, that's a perfectly good way of exiting. Now, coming back to that, the next way to exit is to simply close the business down. Now, this applies to a lot of companies where the owner is the business. It's one-man band. The business is very reliant. So succession planning is going to be very, very difficult. And that's absolutely fine. You can have what we call a lifestyle business, but we have to make sure that we can use the business as efficiently and tax efficiently as possible to get money out the business to fund that financial plan, to get you financially secure. So that's absolutely fine where you don't have to sell the business. You can close it down, but we have to make sure that we use the business correctly over the next 2, 5, 10, 20 years, so that you are able to financially retire, live the lifestyle you want. And so again, it's about working backwards. What do you need? What do we need to do with the business? Can we scale the business to sell? If we can't, can we liquidate? Because there's loads of fixed assets in there. If there aren't any fixed assets, then yes, we need to look at closing the company down. But can we use the company and get cash out the company as tax efficiently as possible?
Absolutely. And Chris, if I can just add in there, in those kind of one-man band kind of businesses, often it's no different to having a job. You set aside a portion of your income into a retirement fund, but that planning takes place when you start working at 20 or 25, not when you're 60. It's too late. So I think it's a really good point.
Just a interjection, and this is UK specific, and apologies to those not in the UK, but certainly in the UK there are real tax efficiencies in investing in your pension or surplus cash into your pension if you're a one-man band. And you need to look at those sort of rules wherever you are in the world.
Yeah, 100%. So I think there's a cool question from Charles here, and there are a few questions that have come through. Is how do you handle the emotional side of selling a business? So some of the preparation, as you guys have spoken about, there's a process, there's succession, there's all these things you can do, and that's where I guess advisors and support teams that help. But I think, Rupert, you touched on that emotional side, having a sense of humor and a friendship. How do you handle
Well,
it?
I think it is all talking it through at the beginning. And again, whatever process you're going through or whoever you're going through it with, you need to understand there is a process of letting go. And I think there's another question about how do you get the owner to let go as well. And you need to talk that through. And, entrepreneurs are the worst people in the world to let go because they like to control everything. That's why they become entrepreneurs and very successful. So it is super tough. So the support network is absolutely key, but you also need to think about what you want to do afterwards. So I, for instance, have a brother-in-law sold his business in Florida, a landscaping business for $10 million. A lot of money. Decided to move to Colorado, ski and climb mountains for the rest of his life. He was in his mid-40s. 2 years later, he was back in Florida running another landscaping business. You've got to actually have a plan. So you need to sit down it's not only do you need an exit plan, you need a plan for after you've left the business as well. And there is going to be emotion, and you need to have that network in place. So make sure you've got those people in place for you.
Yeah, I think from my perspective, there's two key areas. Is like as Rupert said, we need to have a plan of what you're going to do post exit. That also helps to remove a lot of the emotion to the business. So if you know exactly what you're going to be doing once you sell or exit the business, that goes quite a long way to kind of removing the emotional attachment. The next way that I often advise my clients to do is to look at their business through the eyes of the buyer, and look at the company and ask themselves, would I actually buy my business? ? And if the answer is no, why wouldn't you? And that will kind of throw up a lot of issues, like it could be owner dependency in there. It could be some sort of risk profile in there. And so that also helps to desensitize and remove that emotion just by simply looking at your business, not from your eyes, but from a buyer's eyes. And that will go a long way to just kind of getting you to step back and look at your business in a more holistic way, not from kind of rose-tinted spectacles that you've been working in for 20, 30, 40 years. It's got to be worth at least 40 million pounds, whatever the case is. So it does help a lot.
I'm going to jump in. I'll do the next one, Graham, if you don't mind. So it's from Mark Davidson.
Fantastic.
Hello, Mark. Him and I just did a podcast in the last week that we released. So go check out that podcast. The last time I had this many people from the UK around me, I think it feels like a rugby game at the moment. It's quite exciting. So luckily, South Africa's quite good at those. No, just kidding. Well, not really. Moving on from our old World Cup win. So Mark asks, most owners find it very hard to give up control. How do you approach the mindset shift? And I think that's a very, very good question. I am the worst at this in terms of being bad at outsourcing and wanting to touch everything involved, in the business. I think all entrepreneurs are quite bad at this. How do you help them get through this?
But I think I refer back to the answers we've made to the previous question. It is about talking them through it and having a plan. And it is also just explaining to them the importance. I mean, I have been involved in businesses that actually where a owner has effectively sabotaged the sale at the last minute simply because they want to take back control. So it is a case of coaching them through the whole process. I mean, I think entrepreneurs are the hardest people to get through this process, because they are successful business people by doing things incredibly well themselves. So it is tough. And I think it's a case of coaching them through it and putting a plan together and making them very aware that they do have to let go of control.
Yeah. Are you finished, Rupert? Sorry.
Yeah.
With my clients, I say, if you're the smartest person in your business, something's wrong. And so it's about surrounding yourself with people who are actually more clever than you or better than you at doing various roles. And what I always try and get my clients to do is to become their business's CEO. And the CEO tends to really only have three functions. And that is talent acquisition, company or business strategy, and then financials. However, if the owner chooses to remain in control, that's absolutely fine. I've got no issue with that. The downside is that will affect the company's valuation and saleability. So if they want to remain in control, it will have consequences, and those consequences will affect the end result, which will be how sellable the company is and how and the valuation. So I don't like to force people to go down a particular route. I'll just simply explain the consequences and let the entrepreneur decide whether they wish to keep their hands on everything or learn to put processes, procedures, and people in place to run the business.
Fantastic. There's a couple of questions. I think the two are very similar. One from Jonathan and one from Dean. And, from Jonathan, he asked, is do you try and prepare your business for specific categories of buyers? So identify who a buyer is, or is it better just to make your business self-sustaining, self-running, so that any buyer can come in and acquire your business? And I guess the question from Dean, which follows on from that, is have you found that it's easier to sell a general or common business? I mean, I guess a general business might be something like, I'm guessing, a retailer, okay, selling haberdashery. or a niche business? So maybe we can tackle those two questions together. Do you prep your business for a particular type of buyer? And, is it easier to sell a general business or more of a niche business? And perhaps, Cliff, you want to, guys, maybe you want to jump in with some of your thoughts initially, and then we can flip the order around and go with Cliff and then Rupert. I think Ghost is on mute. So, Cliff, maybe you kick it off.
Yeah, again, going back to looking at, or we're starting with the end in mind. What is it that you want to be doing? If you want to sell, who are you going to sell to? Every buyer, whether it's internal or external, will have pros and cons. A lot of owners like to have a legacy, so they want to keep the brand, they want to keep the employees, because once they exit, once they sell, they may still bump into those employees, and they want to keep those good relationships. Other owners don't actually give a damn. They want the highest price, the quickest results, and if the buyer coming in absolutely destroys the brand, destroys and sacks all their staff, they don't care. And so we need to understand exactly what motivates, what drives the owner. And if it is legacy, if it is about them looking after the employees and things like that, then we need to find those buyers who want to keep the brand, want to keep the employees, not just go in and literally sledgehammer the business and take the good assets and burn the rest. And so, yes, we begin with end in mind. We need to understand who the buyer is, because they will have different pros and cons, time-wise as well. That also then filters into deal structure, how you're going to structure the deal so that you can exit in a timely manner. So typically, that is where we look at. In terms of the other kind of question, really, it's about if you can keep your business as general as possible, like if you can attract a private investor who can come into the business without potentially any prior knowledge of that particular business, and there's a management team in there to run the business, you will naturally look to attract the strategic or trade buyers, maybe if it's big enough, even private equity. So if you can keep it as autonomous as possible, it will give you options, but also comes back to who your buyer is. What kind of buyer are you looking to attract? And that will determine how you grow the business.
As always, there is, as Cliff says, I think you do need to make sure your business is saleable. So you've got the key principles in place. Is the cash flow there and the profitability there? Is the continuity there? Whatever the business sector is. So you've got to have those key principles in place. But as a broker, I started my career as a marketeer. So I use old-fashioned. As you can see by the grey hair on my head, I have been around the block a few times. But I start with old-fashioned marketing principles, where I actually start targeting buyers. So whenever I start selling a business, I always start with people in that sector, and then I go on to the more generalists. So there's no simple answer here. Make sure your business is saleable. You would like to think that it would go to somebody that would absolutely continue with the brand and the employees and the ethos of the business, because that's what you want to think about. But at the end of the day, it's got to be saleable. So therefore, it depends on in the current market, there are a lot of corporate investors out there. So they tend to want to plant in a general manager who they will actually recruit. So in that case, you don't have to be that specific. My first business I sold was actually a climate pricing business, and was very specific, and we wanted to sell it to insurance or bank businesses, and we sold it to a Dutch bank. So yes, sometimes you have to be very specific, but I think you need to put the plan together and go back to where Cliff was talking about right at the beginning about putting that plan. Where's the end goal? And you can work out where to go. So it's not quite as simple as just saying yes or no.
I think
it's a bit of
Graham, I just wanted to add to that. My last role before I officially became a ghost.
Great, thanks, guys.
We looked at 2 deals in the sort of 6 months before I left. One we closed and one we passed on valuation. And I think what I learned from that, I knew it going into it, but it's relevant to this question, is the deal we did was I don't want to give too much away, but it was a technology platform that there were really very few buyers for. The thing didn't actually make money in isolation, was going to struggle to make money in isolation, but it was a very useful way for a corporate to solve a problem through a single acquisition. You're buying a good team of technology entrepreneurs. They have a product that immediately solves a problem for you. And that becomes a build or buy analysis. And that's exactly the route we took. We were like, what would it cost us to build this product? How long will it take? What are we losing out in the meantime in terms of market share or whatever the case may be? And that drives the valuation. And it almost doesn't matter what those entrepreneurs think they are worth, because it's what they were worth to us. And there was almost no one else in the market who would have bought them. So it puts everyone in a tricky position, actually, but also maybe an easy position. There was just a very natural transaction, but the value was pretty much determined. The other one I looked at was a household name retailer, which was sort of passed around the market to a couple of people. And there were a bunch of potential buyers on the table. There were financial buyers who were making financial level offers, which means they are really like drilling down to the cash flows, doing the discounted cash flows and making an offer based on their required return. Eventually, they were bought by a strategic who I think wanted the brand, wanted to do some store-in-store type concepts. My view is potentially they're overpaid, but it is what it is. And strategics often do overpay. So I guess the point for a founder, my view would be, if you're going to build something very niche for which there are only a handful of buyers, you're not going to get competitive tension. And that means you're going to get, you might get an okay offer, but it's not going to be incredible necessarily. If you build something that a financial buyer can justify and a strategic buyer can get very excited about, you've got a real chance at having 5 or 6 people in your sales process and getting a very, very cute offer from a strategic. And if that doesn't come through, private equity will make you an offer. So it really, make yourself as attractive as you can to as many people as possible. I'm afraid to say it's a little bit like dating. Don't be too niche, or you're going to have to find that one lid for your particular pot. If you can appeal to a broad range of personalities, you've got a better chance of finding someone. I think that's the sort of message here. Yeah.
I like the dating analogy.
Guys, just to be the timekeeper over here, we are coming to a close. So I think there's time for literally one question. If we can keep it short. There's one last question here from. Yeah. Sorry, I'm trying to find my notes here from Neil. Yeah. Is there any software? And then after this question, we'll quickly talk about the projections. So far, nobody's got it right. 1 or 2 have gotten close. Is there any software available to help business owners successfully start to plan for an exit? So maybe just 30 seconds, Rupert and Cliff. I don't know if it's specifically software or processes or techniques. So maybe you want to take a stab at that, Rupert, and then Cliff can
certainly the way I work, I tend to use techniques and a process rather than software. And I think you two guys are probably far better qualified to talk about software, because your processes will, give much better answers and pointers in that direction. So I will defer to you on those. Just to help people with the quiz, where there's a lot of rugby analogies going on here, I could have actually played for 2 world champions, one through my country of residence and one through my country of birth, which had a connection with a rugby world champion. So maybe that will help a bit.
Cliff, your last question on the software piece. I think you might have been able to that one.
I tend to use 3 main pieces of software. One piece of software I've created myself, and that works out or helps the owner work out exactly where they are from a business, personal, financial point of view, and where they're ultimately going. That then produces a personalized master action plan that gets them to that or through their journey. I then use another piece of software called the Risk Dashboard. The Risk Dashboard is a software that kind of shows the risk profile of the business and shows where areas that need to be improved upon. Great for due diligence that you can give to a potential buyer. So that's software I use as well. And I also use financial enhanced reporting software called VFD Pro. And they produce really detailed enhanced financial reports, DD reports, forecasts, performance reports, all that kind of stuff, so that you can suck all that information out from Xero, Sage, or whatever you use, and can give to a buyer with a nice, neat, what I call Salus pack. That kind of will take out all the guesswork, all the headache, or as much of the headache as possible during the DD phase. So I use my own software plus Risk Dashboard and VFD Pro as a combination to offer a buyer and the seller together to get the DD process done.
Fantastic. And I wouldn't be doing my job properly if I didn't point out that the bizval software is great to help you get a reference point in terms of your value. And our bootcamp product is great in terms of understanding whether your business is actually ready for sale. It's almost like a pre-due diligence check. So take a look on the website and reach out to us if you have any questions around that. But I think, that kind of brings our webinar to a close. So to close off on the clue, I think some people got close around the commonalities. There's a few, not everyone can see the chat, but there's a few comments about being ex-military, looking like they're both involved in horse racing. They both enjoy ice baths. One year it says Cliff looks like a jockey. So unfortunately, nobody's got it. I mean, the closest is that they both do come from the Southern Hemisphere. So Rupert was originally from Zimbabwe and Cliff from the Ferris Cape in Cape Town. And the second one, nobody obviously got the buzzing and the sweet clues at the beginning that they handed out, but they're both beekeepers. So that's a very unusual but obviously interesting hobby. So that's basically the answer. So unfortunately, we're not going to be handing out any prizes. Maybe we'll find who was closest and make contact with you. It looks like that might have been Neil. So Neil will reach out to you and we can take it from there. So any closing remarks, guys, and we can wrap up.
Well, thank you. No, it's been a pleasure. And I think the key is I once had a boss who said to me, failing to plan is planning to fail. I'll leave those thoughts with you.
Yeah, thanks for having me as well, guys. It's been brilliant. I love the questions. And so my kind of final thoughts is that you as owners are doing a great job. And I don't want to see all your hard work and effort and time and sacrifice go to waste. So I would strongly advise, look at what your exit plan is. Look at where you're ultimately wanting to go and start planning for that now, because life is unpredictable. We don't know where we're going, don't know what's happening around the corner. So plan now, get ready now, and that will give you as many options as possible for the future.
Oh, no, I just want to thank our guests. I think we learned a lot here. It's really good to get these insights from across the pond for many of us as South Africans. And I think one of the key takeaways here is the beauty of finance and selling a business and creating value and everything. It travels very well. The same principles that work in the UK also work in South Africa, probably also work in Australia, also work in the US. So if you're doing the right stuff, it means you're doing the right stuff by global standards. So, thanks for joining us on this webinar, and, obviously reach out and engage. That's what we want at bizval. We want to chat to you guys and see how we can help. And Rupert, Cliff, thank you so much for your time.
Thank you.
Thank you.
Great. Thanks, everyone. And just in closing, remember the webinar is available on our YouTube site. Go check it out, share it with friends and colleagues. And you can connect with us or connect with our guests. Their details will be available. And if you can't find them, just reach out to one of the bizval team, and we'll happy to connect you also directly with Rupert and Cliff if needs be. So thanks for joining us, everyone. Have a wonderful rest of the day, and we'll connect with you soon.
Fantastic.
Cheers, guys.
Cheers.
Cheers, guys. Ciao.